Hey, welcome back. Happy New Year. South Factory, back at it, baby. All right. So this week, we want to start off with a nice first red day, 3 days of breakout setup on a Monday trading opportunity, right? And reason why you have to understand what the week does prior to you coming to the market, it will let you know what's happening, right? It'll let you know where you need to go. Do you have a trade? Yes or no? Maybe so. But understanding the day count, understanding like what the market is doing, understanding all of that. So I already put these levels here, but I go ahead and put the titles on them so you know time. Boom, boom. So we already went to the weekly chart. Went on and mark the levels up real quick. And what we are paying attention to, right, is the count. Now the importance is this was Thursday was the high, right? Remember, I always say mark out the closing price of the previous day out of New York. Boom. Right? So that's closing price. So that's going to see a Friday, this Thursday closing price. Reason why that's important, right? Let me show you. Remember, this is every day. Market has did what? Break out, right? So that was closing price of that day. So one, two, three, right? It broke up, but this was the false breakout. So the following day, guess what it did? It broke down. So when Friday rolled around, right? What did Friday do? Friday closed right here, causing you to have your first red day. And why is that key? Because after it did all of this rise, put in your weekly high on that Thursday, and then it fell, that Friday gave you that first red day. And it was happening trading Friday, you already know on the 1 hour chart, you have an order block right here, the price keyed off of. It's that three candlestick order block continuation. You already know what time it is. But price keyed off for that, setting a downturn. You can't have too many days of breakouts. Just if you study the Dow theory, is three forms of waves, three waves up. The Elliott wave speaks of five waves with three corrective waves, but in this case, it did three waves up, then boom, now it went down for 2 to 3 days, then it swung back up, right? So by seeing this on Friday, saying like, okay, cool, market closed there, closed as a red day. So typically what I say is I'll mark my day. B, boom. Said, all right, cool. Mark my day. Now I'm coming in on Monday, and I'm gonna see what do we have here, right? I'm looking at structure, and what do we have way over here on last Tuesday was a fair value gap. So I'm like, okay, bet. We talked about this night before, like, hey, that is up for grabs on the table. Price will want to target that, right? Boom. So what happened? Overnight, the Sunday market price came down, touched, pivoted back up. Monday rolled around. Guess what? 7 o'clock, 8 o'clock hour, price dump back through down into this area here, right? Well, typically what you're looking for on a lower time frame is probably some volume imbalances or anything like that. We could go down into that micro level, but what is the need? But you just need to understand the concept of the setup, right? Right. You just need to understand this concept of what price is doing, right? So when you see price pivot, you still below the high. Where we gonna look for them go? But you're gonna look for them to either take one of the extreme levels. They didn't happen to go any deeper than this. They decide to pivot right here at this specific area. You can dive into that by hitting rewind and going to the lower time frame, seeing what they actually triggered it, the reversal. But needless to say, that's what it was. Now, if they made this a screen push, price out first from this point and go. And as you see, they went to take out the weekly high. So once they took the weekly level, well, guess what? Thursday, they're looking to reset. If they don't push up higher, they're probably going to come down and sweep some lows. So they're probably going to want to take this low, probably come here or here. But the key is they went back up, definitely swept this liquidity because a lot of times people be sitting here with their stop losses, right? And they say, well, I'm looking for a swing trade. If you're looking for that swing trade, you're going to get set up and mopped. But they're not coming back. It's no look back trade. It's a screen push at the last minute with a low hanging fruit opportunity. The real setup was Friday. Monday was the low hanging fruit opportunity, right? Low hanging fruit. So people took this. And then after that, price reversed. People still probably trying to go short here. Who missed this drop? They said, oh, it's open for gold. Let me short again. And this one, they got swept up in this little consolidation here. But that's how gold broke down. Nothing too crazy. By looking, and let's review this real quick. By looking at what happened the previous week, how Friday closed out, we had a signal day. Boom, Friday dump. Don't need to miss it. Just watch price. See price like to retrace. It took a little bit, put it here, but it was a false breakout. Then they dumped. Following candle, let you know what time it was. After that, boom, dump city. Let's see if we can get it on 12-minute chart. You can use 15, whatever you like. So with the Bart Simpson pattern, that's what this is. If you don't know it, should become familiar with it. Let's go and get that out the way. Get this up. Once they got up here, it started all this consolidation. They no longer took a high, right? Boom, they was not taking this high anymore. Breaking down, 8 o'clock hour. Boom, the murder she wrote. Boom, he got to his target. It's up out of there. It is gone. The moment this trade hit, he started doing this. Take your profits, go home. That was over 100 tick move right there. So from the breakdown right here at this low to there, that was over 300 ticks. But if you're just satisfied or you're happy with 100 ticks, you know what 100 ticks can do on gold, you wouldn't be tripping. There you go. You would have been out because you was not being greedy. All right. So hindsight, let's say, hey, you took a breakout trade there. Boom. All you looking for is them to sweep this low here, right? You're looking for them to say, hey, I just want price to sweep this low. Okay, great. You can take your 100 ticks, or you can take to the low. It's totally up to you. But 120 ticks, you just played your cards right. No huss, no fuss. In and out. That's it. But this happened on a Monday. Quick setup. No look back. Nothing to worry about. Okay. So that was that. A slide of crude oil. Awesome. All right. Same thing. This was the weekly high. Reason why we put up the week levels because we want to know what's going on. Want to know who's doing what and where we're currently at with price, right? Same thing. So what I was telling the guys on Sunday, I'm like, well, price is going off. It's Thursday, we had all these days of breakout. We all say, hey, we doing the most. Yup. Right. Boom. Yup. Hey, great. Boom. Yup. See, it's breaking out. Boom. Right. Now, when you got to Friday, I said, hey, they put in a high of the week. We had multiple days of breakout. I'm not sure what they're going to do because we didn't really get no manipulation. I don't really have a signal here besides we just have days of breakout. We need to wait until we get some type of signal, right? I wanted some consolidation on Sunday coming into Monday, which what they did was exactly that. But it happened to come in at the hour I was not looking to trade. It came in at an hour that I was not looking to operate, right? So we had our consolidation here. Boom. Then we had the manipulation down at the bottom, run up for liquidity. Now, once this took place, okay, once this took place right here, oh, price dump back down, taking the lows, right? But here's the thing. At 10 o'clock, that's my cutoff. So I wasn't looking no more. I got busy, went on with my day, but that's what happened. It took liquidity, pushed up a little bit higher, and then bam, dump, sweeping lows, right? But from there, it's decided to halt the brakes. Part. Do it again. Consolidation. You had the consolidation. You got the breakout. Love to see it on Tuesday. Swept the highs over here, right? But this would happen. Put in a nice little even star. Right. Nice little even star in the London market. You would have caught that pivot, right? Right here, second chance opportunity. It jumps up because we know good and well you trade in London, cool beans. If not, it is what it is. No look back opportunity, straight dump action. Once you see that price fail to come here, we wait for the next candle. Straight dump. No huss. No fuss, no huss. Right up, right? No, none of that. Yes, boom, 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 boom. Cheese slid out the cracker. The trading day, you already know what time it is because the money was there to be made. You already know this low here. You want to take the breakout to that low that's 110, right? Or you want to come up a little bit higher. It's totally up to you. Or you would have been getting in that. But definitely, once you've seen this coming down, okay, great. What I would do is come right there. I'll be looking because that's how I'm coming first thing in the morning, right? I'm gonna see that. I'm like, okay, cool. What can happen? Throw my fib on it. Throw my fib on it. Catch it at the 618. What it do? This always say, crude oil love the 618. They love it. Love it. Right there. Once it stop, if you don't want to take it at 618, you see this happening, you can get in on next candle. Stop loss right there. So a lot of times, if you don't like or you don't trust the position, let it go past the 50. Now you got to define risk because it shouldn't get past this pivot point. So you can risk 16 ticks. Well, you got 52 right there. You got 81 at the negative 27. You have 116 right there at the negative 618, right? But I'm looking for 100 ticks. So I'm right here. I'm out. Boom. 11 o'clock. So you could have got in at 8, done by 11. Once you got your stop loss and the profit, no need to cry about it. Go on about your business, Jack. Go on about your business. That's how you look at that. So things like that will help you in these setups here. This new market coming in. We got a new president. We got new House members. We're getting a whole new upgrade here. So the market may be behaving a little bit different. Your setups may not be working, but you keep it simple. You can get in, do what you need to do, get out the way. Now, if you feel like it don't work, sit back, paper trade, take your time, ease back into the market, let the market do what it's gonna do. Let it show you what the behaviors are. Let it show you the little tips and tricks that it got for you, right? You let that play out and you should be good. If you rush into the market saying, I'm gonna do what I always did and it don't work, it is what it is. That's on you. Take your time. It's no need. It's 11 months left in the market. You can take 1 month off and just paper trade or watch or tiptoe back into the market until you get your footing and you see what you need to see and you get it how you live. But so far, so good. The same setups we've been using, still working, and we should still be eating. All right. Now, on that note, that's all I got for you. We're going to keep that smooth. Welcome back. Start a new year. Happy to have everybody back. You already know. Peace.